Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by. It is August 5th, 2024, and we have a global outlier event with a substantial gap in the ES. Last I looked at it, it was around 228 or so points. We're in an extreme outlier situation, somewhat of a global meltdown going on. And these are the kind of events where trade plan and experience become most important. And part of that experience is not only a plan that you can follow, but also recognizing your emotional states and the triggers. These are the kind of days that many retail traders leave the business because they are taken over and swept away by the volatility and lack of risk controls and adherence to plans. So hopefully you are following a vetted trade plan, and you also know when you have an edge and when you don't. And if you are gambling, you have a lot of work to do to stay in this business. My opinion and what I've observed over many years. Many retail traders leave the business after something like this. So because they do not have the maturity in the business to understand where a true opportunity shows up and when they're just responding to the extreme stimulus that'll take place under these conditions. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, please remember, this is not a trade calling room. This is for educational purposes only. Can I get a screen and audio check, please? In Bookmap, Trader Lab, in the Discord community, and also in YouTube. Thanks, everybody. Okay, great. If you have questions, please post them. I can't see them while I'm looking at this other monitor. They are on different monitors, but I will come up for oxygen. Obviously, we have an outlier of a day. Now, a couple of things I want to talk about. And these are all posted in Trader Lab before market opened in RTH based on, of course, what was going on. It is so important today to have a plan. And sometimes the best opportunities are presented by not engaging. And this may sound counterintuitive to you, but many traders, this is the kind of thing that in your career, they do happen. I've been through a lot of them, but I'm also going on 45 years of trading. So I've been through many of these events. And I've also seen what's happened to other traders who were successful traders and see them blow out. So you really need to know your limitations, and you also need to really be conscious of, from your experience, what is going to happen to you psychologically under these conditions. It's going to generate fight and flight, FOMO, all those things that we're familiar with, revenge trading, violating your risk management process or loss limits. Anything that can go wrong will go wrong on a day like today. The other issue is, if you look at the ES, which normally has a lot of depth in the book, and this is right at the RTH open here that we're going to look at, the book is very thin. And when you have a thin book, it adds more to the risk side of things. That's called getting skidded. And if you're in a thinner product like the NQ or something, there's basically gaps in the book. And it all adds to that element of risk. If you do participate in the market, due to the size of the rotations and the volatility, you can't use your typical risk approach. You're going to have to expand your risk. That means dropping size, etc., or even not participating. The other part of that is suppose you do see trades, but you can't enter uh, within the risk parameter. A trader who's career minded will not take that trade because, again, the setup requires a certain risk parameter. Uh, you can increase your risk, but you also have to, based on the volatility and the rotations, but then again, you should be dropping your size to try to stay within the parameters. So these are all the elements. And if you haven't been through this before, it should become part of your plan. There will be other days like this. However, you do need to be able to be here for tomorrow. At least for me, I have found over the years, it's more important for me. I mean, there's so many trading days in a year that I either wait for trades in this configuration that will fit. I drop size, and or if I get structured trades that don't fit, I just wait for the next one that does. It becomes less important to me, and it's really not important to me. And this is just based on time in that this is something that I need to participate in if it doesn't fit. Because if I start behaving like most other retail traders do, I should not expect a different outcome. That's just something, again, I'm not saying you should make those choices. I'm saying those are my choices. So I'm just adhering to my experience, and I'm not too concerned really about what, I mean, when you have all day, one of the things that's going to happen is as the day progresses, it's going to settle down a bit. And that to me is much more tradable than just trying to run around in this. So again, just a personal opinion, not a recommendation. You need to develop a trade plan. The other thing I always recommend is that you journal. And today especially, what are your feelings? If you're not in touch with your feelings, you're going to miss a great opportunity to learn more about yourself. When you have extreme conditions, you have extreme stimulus. So all these things kind of go together. So what do we anticipate? Well, old saying that you've heard if you've been following the stream. The market goes up to go down and the market goes down to go up. Some things are generic. Market mechanics are somewhat generic. Volatility and the rest of that, while we always have it present, you have to be conscious of what is going on. And obviously, this is just not another walk in the park. So what do we anticipate? RTH open. Anybody who's sitting long, maybe, will either be bailing out or will be caught in this gap and their account will be blown out. All that kind of stuff goes on for those who are positioning in a highly leveraged product like futures. So we can see some liquidation, and then we also can see possibly short covering. Those would become responders. Now, the thing we don't know in a situation like this is, are we going to just open, rotate up, and then continue lower? In other words, you get your selling, then you get your rotation up, and then you get a selling opportunity for potential continuation. So that is an unknown when we start out. So RTH open. So for me, I have no trade. And it doesn't matter what I do. I'll mention what I do. But I also am very much, when it comes to the Trader Lab, I'm about helping traders develop and sustain a career in this business. To me, gambling is always better at the casino because you get the cocktails and the ticket to the buffet. And I want traders in the Trader Lab, my objective for them is to have a business, not to blow themselves out. Now, everybody makes their own choices, and we're all adults here, hopefully. So all I can say is I posted these things, these ideas and suggestions this morning, and it's up to each individual, as far as how they approach the market. And everybody's different. There's not a right way to trade. But we do know if you've been doing this for a while, you do need to recognize what is triggering you. And if it's something that is not in your best interest, hopefully you've developed enough familiarity with it. Put the brakes on and wait until you calm down, if that's indeed what your experience is. And it's quite normal, by the way. So this shows us early selling. This is called the variable high volume node, and the market we get our sellers. So right here, so seller, seller, seller. So for me, I have nothing here. I see now this is called the variable high volume node. I'm going to label it. And what you're going to see is something I do all the time here, every day in the stream. I follow process. And the fact that the volatility is higher creates the element of risk and speed, but doesn't change market mechanics. Now, at this early stage, and I also post this in the Trader Lab, that the auction is disrupted. Now, is it a fundamental event, by the situation in the Middle East? We know what's going on there. What is it? Well, it could be a lot of different things. But the auction is disrupted under this event in these conditions. So the typical benchmarks don't typically mean anything. It doesn't mean that you won't see a trade and it works. But until we settle down, we are in a disrupted scenario. So for me, I have to wait. So let's take a look. This was too high. I'm going to mark it. I'm going to try to go through the broad strokes here because there were some nice trades that set up here that are Trader Lab structured trades. But the volatility, and you will see, I will show you trades that I wouldn't take that set up that are Trader Lab trades. I'm going to show them to you. This is a structured trade in the Trader Lab. And, but when you're in 30 seconds, it's not a trade I can take. But under normal, and this is not normal conditions, this is a variable high volume node. So what this is I'm going to show, these are structured trades. Now, I cannot take this trade. And you're going to say, why? Because it's 30 seconds in, and I don't know if we're coming or going at this point. This sets up a trigger. Now, I cannot read it. I have nothing in the book. 15, I cannot trade it. So it's not qualified. I'm just telling you. Now, this has structure, but it does not meet my parameters. Here's the other thing. By the time I see my trigger, which is here, right here, where's the market? It's here. I have no trade. So I'm just saying I'm just looking at this and I'm going, I don't know. So I'm just sitting back. Let's come back. Here is a potential trigger. This is the micro high volume structure. This is your potential trigger retracement. Again, nothing for me to do. So what I'm leaning on is this, and in the microstructure, this. Okay. So am I going to sell it is the question. For me, I have no trade. I'm showing you structure. I'm not, and nothing more than that. So I'm do nothing in this. Let me look a little lower over here. Variable high volume node is here. This shifts down. This becomes a variable high volume node. We're very early in, and the volume point of control, this yellow line, is extremely sensitive. So it's going to be all over the place. I do not trade this. And there are traders in Trader Lab who are trading today. And I also am trading today, but I don't trade this. I just say I want it to settle down. So VPOC migration. So we're up. You see how this is moving around. And the reason it's bouncing around is high volume, high volume. These are all little consolidations. And it's going to be all over the place. So again, I have nothing to do. So I just hang out. We break above here. Variable high volume node. We break above. We pull back. This sets up a potential long. No, this is the mid. This is too low. But again, you're in 3 minutes. And again, for me, I have no trades. Book is extremely thin. I'm looking at the limit order book. I know if I'm trying to get in, I'm going to be skidded, and I'm not so concerned about getting in. I use a limit order in these conditions. It stops. If I take a stop, they're going to catch up with me in a week. So it's my risk then is outside for me. So you can see the volatility here. This is actually a microstructure short right here. You have your micro volume there. You can see it. You have absorption here. We break low. This is a Trader Lab trigger. We pull back. The best you got on this is called mean reversion if you take it. And, you know, there's some decent range on this, but the speed is the hard part, I think. And you'd be coming back here and you'd take it, you know, unless you scaled, you would have a problem. You would not get to your target. The other thing you could do with this is you could, you know, go for mid and VWAP and then back here, and then you'd be looking for it to come across the range. You're trying to pick the high. And again, we don't know about that. VPOC migration. Let's label this. So we're looking to see, and there's actually, I didn't show you some levels. I got to show you some levels that are on the hip parade here that I forgot to mention to you. Hold on a second. This is a naked volume point of control, 5125. It was a target. We tested it in the ETH. It is a material target right here. This is auction based. So when I was looking at this, I was thinking, well, this might be too low. And I forgot to mention that. 50 to, I think it's 50, where is it? 25 is another target here coming up. So that's a target. That's a naked volume point of control that we opened below. So we have this below us, which would be a target. It still is a target. We tested it in the ETH, maybe too low. Forgot all about that. Sorry, guys. We have this 5120 or 19. I think it's 19. Hold on one second. Got to make sure everything is right. And we had this 52, 47-ish or so, 48. This is a naked volume point of control. So target on the downside, target could have been target on the upside, next target on the upside. And these are just auction-based levels, overnight volume point of control, another target. Now, this is assuming the auction settles down and we start operating, you know, kind of back inside a structure. So those are targets. These variable high volume nodes are the developing high volume areas. They operate like naked volume points of control, except they're dynamic because the auction is changing. In other words, what do we think is retail? When you leave a level behind, and they're called naked because they're at RTH close, the last time we were here, this was the highest volume. Think of it like shopping. It's a retail price. If the market trades away from these and it auctions higher, it says under the current conditions, this was too low last time we were down here. If we open below it, then it might be too high. This might be too low. So this one is too low so far. So this one might have been too high. We went above it. We go to the next one. That's how the auction works. And then in the developing time frame, we have this as a reference because it's real time and it's dynamic. And it won't lock in till the end of the RTH session. I hope that makes sense. So what we're trying to figure out with this, first of all, we have a suspicion that what's below us might be too low. And suspicion is the best you got. So, but what is the current condition here? Well, we have the VPOC migrating higher. That is suggesting there's more volume at higher levels than there is down below. So there's very little volume down here in the market left. And as we're auctioning these levels, we're leaving them behind. So that is suggesting they might be too low. So as we come outside, if we leave a distribution, this creates low volume nodes. So that's a low volume node. It's like, there's one down here. And when you leave a distribution, it leaves this space. And then we auction and we keep coming up and we're auctioning and we're auctioning. And what it's doing is consolidating inside. And as we're marching up, if this becomes too low, we'll continue. So what can happen is we can come outside, and we don't know where outside is, part of the joy. And you can see we have some resting liquidity here. We come into it. We have absorption, which is this. We get a buyer up here. I get my seller. I'm just going to show you structure. And we have high volume here. This is actually a microstructure and a trigger in the Trader Lab. The goal here is called mean reversion. And this is tricky because we can keep going up naturally. But this is showing mean reversion. And what mean reversion is, and the way this would work is, and this is just a Trader Lab structured trade. And again, you have to be conscious. Now, I want to show you something else here. You look at the limit order book. It is now in the 70s and 80s. When we first opened, it was much thinner. We have about twice as much now in the limit order book. You should take a note of this. In these kinds of conditions, you must be looking at the depth of the book. Write that down. So we have more depth, which might, and I always say maybe, might indicate better, with the depth you potentially, and you never know, are going to get better fills on your stops, maybe less skidding. But remember, getting skidded has to do also where your position is in the queue. So, if you're last in there, they'll call you later. So you want to, when you place your orders, you want to get your stops and your targets in, because they're going to be limits most likely. And when you hit the plunger or the eject button with our market order, chances are you're not going to have such a good fill. It's all part of the risk issue. So here we have the absorption. Here we see our sellers. Here we have a buyer. And I think we have a sweep going on over here, and we have a sweep here. The book's thin. That's why you're going to see a lot of sweeps. Here's your high volume structure. So if you're getting short, it's going to be against the volume. Let's look at the trade. Here's the volume. This is a structured trade in the Trader Lab. Your target is this. It's called mean reversion. And look at the range here. You're looking around, let's call it 97 to 84. That's decent. So you would get that. Then what you have to be thinking about is, are we going to get below the mid and the VWAP? And this is really where you're trying to go. Now, what you don't know, and this is part of the joy, is where to. So that's trade management. So this might come here, variable high volume node, or we're going to get buyers at the mid and the VWAP. That's what I know in a mean reversion trade. And I also know, and here's the other piece to this, that the volume point of control is migrating higher. So the way to think of this from the auction is, what's too high, what's retail, in other words, the fair price, and what's too low. This is too low. Also, and now remember, if that's too high and this is too high, is this too low, or is it out here, or where is it, right? Because now we don't know that. We're going to learn that based on what happens right here. So we have this. Retail price is going up. That is saying if we don't return here, you cannot buy an S&P at this store. They're sold out. Now we're in this store, and the price of an S&P right now is here. If the price gets too high, the shoppers may say, this is too high, and you can see it. We're leaving the store. We're coming back here to shop. The market retraces, and basically what this is a test of this consolidation or shopping experience. I'm not paying that. I'm leaving. Are you sure? No, still too expensive. Then let's come back to this store. Now, where's too low? That's the next piece of this. Let's look. Let's come here. Too high? Where's the next location? Here. Back to here. Potentially buyers. These guys get absorbed. You have an iceberg here. Now, who knows, right? Nobody knows. So, too high. Too high. Look where we come back. Too high to this high volume. There's a buyer absorbs here. I come here. I have this volume. And you see the alignment. I now counter rotate. So, too high. Just look at the symmetry. Too high. And remember, what's too low? This. So the next thing I need to do is get under here if I'm going to rotate outside. So let's just look. I come back here. I have micro volume right in there. So these guys were absorbed right here. Now, so the key becomes, if we come down here, can we take them out? Or, this is the joy, do the buyers turn up again here? Because it might be too low. I have buying iceberg. So 200 icebergs right in here. So they are being absorbed. That trade's over. So what do you do with this thing? Let me just check a setting here for you guys. Well, I don't want to change that. Okay. So right here, if you're protecting the short, this is the last place where the buyers failed. And you have this chop, chop, chop or consolidation. So this high volume right in here is where this trade would fail. The other thing you would know if you're using an order flow tool is what happened in here. That's what we have to clear. So when you don't clear it, where the last place the sellers were still in control was here, and then here absorbed. So if I get above this, then this trade is over. Here's something else that's interesting. You see the absorption here? So you had sellers here, which are probably related to these guys, cousins, and there's the selling, and the buyers consume them. That's why this trade is over. Does that make sense? So that trade is over. Okay, let's move on. This is a target up above right here. 17 is the next area. Let's look at behavior if we get any behavior right here. Now remember, in this volatility, these are just levels in the auction are very important. Subject to the condition of the market, they're just areas. I always say horseshoes and hand grenades. There's no precision, absolutely no precision in anything ever. So let's look at the behavior. We come up to the next level, which is here. So what do we have here? Sellers are active here. Now I see buyers going to the moon. I'm here. So now I want to see behavior. Let's look at behavior. So here, buyers. I see my sellers. I see my buyers. Now for me, I look at these levels and I'm looking for a reaction, because if this is too high, and remember, too high is right now, not necessarily indefinitely, but there's no way to know that. I am just looking, and I'd be looking for shorts from here back to here in this condition. And but I don't know, like everything. So if I'm looking for a short, I'm going to, and I have to see the behavior. And also right now I have VWAP, mid, and VPOC. So possibly I can anticipate a reaction from here back to here. Let's see if it does it. This is VPOC migration. This is a problem for any shorts. And I don't have a trigger. Here's the other part. So right here, I do not have a trigger. I have a location. I have no trigger. So then what needs to happen is, if this is going to fail, it's going to come back into this area for a test. So I'm looking here for a short. And let's just watch. I get VPOC migration. This throws a wrench into the whole thing. So right here is a problem. Why? Because the value is moving higher and this might be too high. This is leftover. It's static. This is developing. VPOC migration is suggesting higher. So I'm going to label it. So far, what this is suggesting is caution on any shorts. So I have no short because I have no location. And that's the report, by the way. You guys remember 9 o'clock big report. You know, we had the ISM. So that's a huge event. This is the next target, 52.47 and change. I think it was 47 or 48.50, something like that. This was my next level. So I've got that. I'm now above it. And now I have this. I have resting liquidity at 55. So let's take a look. Markets coming up. Location. Liquidity. I see sellers. I have alignment. All this is coming together for potential short. Now, let's look a little further. Now, these are not trade recommendations, and one person's long can be somebody else's short. This now is the volume point of control. So I am looking at this, and it's kind of the same trade I was looking at the lower level, which would be potentially mean reversion, and the VPOC migration took that off the table. So now I'm looking at this and I'm thinking, and I'm not really thinking about, well, I'm just thinking about trading it. You know, is it going up? Is it going down? I'm trading rotation. So I don't get too concerned about what it's doing. I do know statistically, though, I have a high probability of taking out the first hour's high, which will be at 9:30 my time. So if I'm taking shorts, I haven't forgotten that there's a good chance I'll take out whatever the first hour's high is, wherever that might be. But that doesn't fit or get fixed until 9:30. So if I see absorption, liquidity, all these pieces are order flow related, and this auction related location. So we have a suspect here. So let's look at this. And again, this is just subject to trade plan. There are traders who are going to be taking the counter rotations to get long. There's other traders who are going to take the shorts. There's other traders who are going to take both. It's all a matter of how you want to slice it and dice it. So let me take a look at this one. So this is a Trader Lab structured trade. It's called mean reversion, and we always say mean. The reason this trade might work, and again, they're all random, is the location, the order flow, the absorption, and a trigger. So this is Trader Lab structured trade. I'm going to take you into it in a little more depth. And if you have questions about this one or any other one, let me know. So right here, this is the area. So coming up, I am now looking at this. This is here. This is here. And I'm looking now, I'm thinking maybe a short. And at the time, my VPOC is wherever, here. So I'm thinking if this is a short, it possibly can come here to this one or to the current one. And this is more important because this is what's happening now. So anyway, I'm stalking it's called mean reversion trade. And depending how you think the trend might be, it is a counter trend trade in this configuration. But we have longs in the leg, and the market goes up to go down and goes down to go up. So anyway, I'm looking for the short. I see this, and it's at my location. So I'm now thinking, oh, this might be it. Paying attention. Finger on the trigger. Watch. So I see the buyers. So I'm going to open this up. So I'm seeing absorption. So I'm getting the alignment. So, and I have this. So you just got to see the pieces. So I see the chop. And right here, this is a developing trigger. It breaks high. Okay, no trigger. Micro high volume is now here. I come down, I have absorption again. Is this it? Break low. So right here, this is a suspect, right there. High volume absorption. I'm seeing my sellers. I'm in a location. I see my seller. I see a buyer. I see a seller. Right here, I'm looking to put the trade on. What happens? I see the seller and it breaks high. And I'm going, wow. Right now I'm going, I don't know. Of course I don't know. I hit this. I'm seeing my selling icebergs. All of this is happening at an area of confluence. And of course, I'm always going to say I'm clueless because cluelessness implies randomness. And uncertainty is the only thing you have. So again, I'm up here and I'm going, well, I don't know, I'm just sitting and waiting for a trigger. I thought it was going to be here because I have this, and that. And then I see this. So right here, I'm thinking I got my trigger. So I'm looking here and I'm looking for the break. I get a buyer here. I'm looking for the break. I'm not getting it. And I could have very well gotten short here. My stop would have to be out here. But that's, 6-point stops. You see what I'm saying? So you got to act accordingly based on what fits your trade plan. So here I see the seller. I get the seller here and I have micro structure. Now the difference here and here is you see the buyers and the volume going off here and the absorption. Here you see the buyers and now you see nothing. And now I see the absorption again and we break. This is weaker than this. This now is support right here. And that's this is the support because we broke high. It's the same thing as breaking high over a variable high volume node or VPOC. It becomes support. So this, which I thought was going to be resistance, break high, is now support. Now we come up to another level. We have the same behavior in a tighter consolidation. You can kind of see the rationale maybe. I have my absorption. Now I break. I break below this. So I have two levels right now of resistance. I'm going to just hang out here a little bit so you can kind of see what some of this is. And then you can kind of see maybe how you might use these. Thinking in auction, this is, quote, my indicator is the indication of the participant behavior here, not something that's lagging or anything. I know the market's going up. I know that the probability is I'm going to come out here. And I know the market is long. So if I'm trading rotations, which is a day trader, that's my thing, then I'm looking here to get short in here. My stop is going to need to be over here or even out here. So let's look at where it comes. So I have two locations. I have this with a stop either here or here, and I have this or this with a stop here or here. So you're looking at 5-6 point stops. What I do is I cut my size. That's what I do. I'm not here to, that's what I do. I cut my size. And this is, going for that VPOC down. Where is that thing? This. So that was the target. There. VPOC migration. What have you seen before with that? Get out of Dodge. So this mid and VWAP and VWAP, I can anticipate in an uptrend the possibility of a reaction. Now, it might only give me a counter rotation and we go down, right? So for me, the primary trade is what's called mean reversion, and make a note of this. This is all available in Trader Lab if you're interested in this. And that was a nice trade, okay? But I had to really adjust my thing because of the range for risk management. So I just cut size. That's it. No more complicated than that. Because if I have to risk more, I'm okay increasing my risk because of the range of the rotations. You see what I'm saying? So I put it in proportion. And then based on the number of contracts I trade, to try to keep things kind of constant, I just cut size down because I'm offsetting that with the increase in the range. Does that make sense? Is that yes? No? You guys following me? By the way, if you're in YouTube, please give a thumb up if you're finding this interesting. This is trading with the auction using auction-based levels, and the levels are generated by the participants, not by an indicator. This right here is a retail price. That's why it's a target. This is specifically uptrend, and by uptrend, I don't know about up, but in the current developing time frame, up, and a high probability of taking this out sometime after 9:30 my time. That's called the initial balance high. It is based on the first hour's range from low to high, and we have a pretty big range. So you can see why this was a short, and the return here is called, specifically, it's a context called mean reversion. This migrates higher. This again is suggesting that we are accepting these higher prices. Now, the thing about the auction, and to remember, is what we accept, we may reject. So it's a dynamic process. Trading, in my opinion, at least from what I've experienced, is not a black and white mechanical process. It is dynamic. So the market changes. So if the market's going up, why does it do this? Well, is this the same plan as a directional move up? Or if this is a counter rotation plan, what it is called mean reversion. So this is a plan inside a plan. And you would, if you don't have that kind of process that enables you to operate in different configurations or time frames inside of other time frames, or as I think of them as fractals, then you might be missing pieces to a puzzle. So for me, this is a structured trade in TraderLab. This is a trade that you can learn. And now there's another side to it. This is the retail price. This is called VPOC migration. This sets up a potential upside rotation, and this is your resistance because this is where it was too high. Let's just see what happens here. We get a little bounce. This is too high. We come down here. And then what's too low? It was down here. Now anything can happen. Let's just see if there's symmetry to this. Huge volatility. This is still too low. This moves up. Right down here we test. And then we come down here. So there's nothing here. So what this is right here, when you break here and you hit this, then this is your resistance. So this is support. This is a TraderLab trade, not anything I participated in. Just saying. So, and the reason for me was this. Now I know this has a high probability at 9:30. So I'm interested in this. So I have to wait. So this is too low. There's the test. This is too high. If I got involved here, this is my obstacle. I mean, there's a lot of range here. It's not that you can't operate, but let's look at the trigger. You have to be very quick in all this. And I think that's pretty hard for most traders because of how fast it's moving. If you're hitting market, you might get in over here. I mean, and then your risk is going to be down here, you know. So I'll just tell you, for me, if I see a trigger and it gets away from me, I just say I'm waiting for the next bus. I'm not, I'm just, I guess the thing about it is, for me, is I get to the point where I can say, I don't care. I just wait for the trades that fit. It just doesn't matter. It's almost like, I posted some some interesting things about, gambling, if you will, or bet placing, and patience. and not being overactive or taking bad bets, if you will. And in these links I posted were about Annie Potts, I think her name was, or is, and she is I believe, a neuro or cognitive scientist who went into poker, and she became a poker champ, and played the poker and won, which is quite a thing, and at 26 years old, and she learned about, and if you listen to these, and they're available in the Bookmap Discord Trader Lab community, and there's a link in the bottom of YouTube. It's really important. And she's a consultant to hedge funds and to options houses and stuff about risk taking. You really need to understand risk. And I always think of there's risk and there's intelligent risk. Risk is the number one element you got to respect in this business. And journaling to recognize what triggers these behaviors in you that are not in your best interest. Here's a micro high volume structure. You can see it right there. It's in alignment with a higher time frame developing structure, the variable high volume node, and this is the mid. This sets up a potential long. Now here's the trigger. There's the buyer. You can see it, right? Now this happens very fast, and the thing about this is, when we come to a level that's already on your chart, and that's why we mark these things, and there's the mid, you would know that you have to observe here. Not the step in front of it, but the see behavior. So we have our sellers, and I see a buyer here. That little node is a micro high volume structure. It is in alignment. So let's watch it. This is a trigger. This is your target. This is the same as the short that came down. It is potentially mean reversion. If you come outside, and we have a couple structured trades in the Trader Lab. One of them is VWAP to VPOC. The other one would be mid. Same trade. They're just locations. And we know there's stops at the VWAP and stops under the mid. So it creates a fair amount of risk, except, well, it always has risk. Location, microstructure, and inside of this little thing is the same as that. This is a developing structure, which you can see over here, which was too low. When I come down to it, I am now in a smaller time frame with the same process. That is too low. So too low in a developing time frame, higher time frame, if you will. Too low in the microstructure. Now, I don't know. What do I have as a reference point? This. It was past, in the past, too low. This is developing. This now becomes too low. It is too low. Was too low, is retail currently. So if this is too low, that was too low, this is retail now, then the trade is from here to here, structured trade. Let's look now. I hope that makes sense. I'm taking my time because I want you to understand it. This is too low, microstructure. This is the entry. Limit order here, stop under here, or give it a little room, your call. Target here. Mean reversion trades right there. So this is from here to here. This is a scale. If you're going for 930, which is the IB trade, this would be a decent long. Look what we did. Too low, retail. Micro, too low, retail. That's the trade called mean reversion. And we're using multiple time frames. I just want to point this out to you. Does this make sense to you guys? This is trading in fractals. This is using the auction. Now, the outcome, hey, I'm going to say welcome to the fast lane, because the outcome is always random. Some of my charts here have gone kaput. Not Bookmap, but it's my fault too. So I can't see a lot of the other stuff that's going on here, which is okay. We can stay right here. So we're going to operate now. So this trade failed. fails in the sense, well, it doesn't fail because this is the primary objective, then a runner to take out the first hour high. So what happens? Let's follow a story. The auction is a story, and I always think of it like language. So I'm not my indicator, I don't need an indicator for this. I have the indication of the participant behavior. So call it an indicator. And your indicators, if they're output price-based derivative, which all of them are going to be following this and lagging. Now, I don't know what your indicator tells you. It's not for me. I don't use them, so I can't, but I have, of course. I mean, everybody. We all start out doing the same stuff. So what do I know? Well, I know the retail price is above me. I know this was too low. I know I had a long here, and I got to the retail price, and it said too high. I'm going, oh, well, that's nice. Now what? Where's my location for my next trade? If I come under here, then I know this is too low. So, and I know another thing. It somewhere out here, and this is part of the, the joy. And by the way, I have a swing out here also. There's going to be stops under here, stops under here. So there's all stops under all these things. And when you come outside like this, you don't know where outside is. So I know this is too low. And then I know this is my current, was also too low, which is the basis for the long I just showed you. And then once we come down underneath, the teeth chatter and I go, what's going on? I do. And I just go, oh, what's going on? I don't know what's going on. So let's look. So, and remember, 930, the IB high is in. It's this. I'm going for this. So I have great range now. Look at this, 50, 70 point trade. Can I get that? And, so how do I get it? Let's try to see. So we come outside, and right here, now my outside edge is out here someplace. This is support, and I'm saying it would be great if I come out here or even out in here, because then I would do the opposite side of the mean reversion. Remember, the short was outside in. What I'm going to try to do is get outside in, mean reversion. Same, from the side that's aligned with my statistic up above, that has a over 90% probability of getting out here. And don't forget, this was too high. So this is an important area for me. And I know I can come out here and then maybe come back in. I'm not concerned about that. I'm concerned about the long. And I have targets above also, but that's neither here nor there. Let's see, where are my targets above? I have something on my chart at 5270. That might be stale. I have no idea. We jumped out of range, so I didn't get to update all my levels. Well, 5270-ish is something, so that's something to think about. So let's look at this. So we come back up, and this here I have nothing to do. I hit this. So this is my retail price. I know it's too high, and now maybe it's too low, and this is mean reversion. So I've come back to the mean. Now what happens here? Is this too high? Now I know what's too low. It's here. So let me come back. I'm going to mark this. And again, this is only in hindsight because it's like being out in midair. So I don't know. I mean, I never know anyway, so I still don't know. But that's besides the point. So I come out here. Let's look at it. I have a high volume node here, right there. So coming down, so we could see what's going on here. Here's retail. I break low. I come back and test it. This is a micro high volume structure. I leave it here. I have a seller here. I break high. This is too low, but this is where the sellers took over, right? And what is this? I'm below that. Too high. Micro, sellers in control. I leave it. So too high, see the structure? Micro, break, test it, micro, too high, break. What's going on? Clueless, break here, see buyers, break here, here, buyers, sellers. Now here I'm thinking maybe reversal, but I get the seller here. So they failed here. Then I see the buyers. Now this looks like a developing trigger. I'm going to put a line on it because it's a suspect. I'm going to put it right at the high volume. We'll take a look at it. So what do I know? Let's come back to what I know. This is too low. This is too high. And the VPOC might be too high. But if we rotate back across, then we can mean revert and come out the top. That's what I'm looking for. And again, extremely clueless. What happens here? Buyers come again. So I'm going, okay. Now right here, if I want to try to get involved, I have to look at my volume. My volume is here, the high volume node, and now I have volume here. I'm going to put another little line here. So I have this kind of as my area. This not workable for me. And now, so now I have to look at this and go, do I have a way into this? Is everybody tracking? Can you see the entry? How are we doing in YouTube? Yeah, Loeb, I'll show you one when we get to it, but I don't call trades. It's not really worth our time. If you don't understand how the market works, or I mean anybody, then the idea is to understand a process. By the way, if you want to see live trades, that's a great question, Loeb. There's a link in the bottom of YouTube. Go to the Bookmap Discord Trader Lab chat. There's a library of webinars, live trading up to about 5 hours long. Quite a bunch of them that I've done over the years. You can see, because there was enough time for me to go into market mechanics of it, how it works, and then go into real time. If I have a chance, I'll get into it. But I'm showing these are structured trades in TraderLab. This is your long. Now here, I can't enter it, but this is the structure in the microstructure. So for me, when I see this, I'm thinking I don't have a trade here. That's all. But I'm always putting these levels in. So when I come down here, this is my target because this is that mean reversion structure. So right here, if I got long, my stop's under here. If it comes out here, my stop is here. This is the high volume. This is the pullback. This is the structured Trader Lab trigger. And there's 60 PDFs you can download of these if you're interested in them. By the way, the level I had is around 5271 or so for the it was an old micro composite volume point control. And I don't know if it's accurate. I'm just mentioning it because it's sitting on my chart. And since I haven't reviewed all these levels. So this is the target. Remember, mean reversion, micro mean to mean. Same trade we took before from over there back to here. Now, the key to this is if we pull back here, so this is where the trade fails. And if we can get across, then the target is the IB. This. So this is the next target. If we can hang through this thing. So let's see if this trade works. VWAP to VPOC. This is a structured trade in TraderLab. So what you have is this long to there, here to here, and you're still going for the IB, wherever that is. Pull back to the VHVN. I still can use these levels if I choose. Now, if you put this on here, you've got to scale. So, for example, here to here is a viable trade. Here to here is a viable trade. Here, this is questionable. It would be to here or here, viable trades. Here to here or here, these are structured trades. If you're keeping your stop under here, you'd be taken out. You come back here, subject to your plan, you have a level, you can operate in it or not. When you come across here, now you're on your way. So if you got taken out, It's up to your trade plan. You might not have a way back in. For me, I look at this. And where we're trying to go, what do we get? Of course. Where's our IB high, by the way? It's up above us, right? Yep, up here. So we're trying to go from here to there. So trade management, right? So this, I don't know if you can do anything with this. I didn't. I come outside. I see a structure here. This is very tenuous for me. Okay. Except I want to go for my stat. VPOC migration. This is a structured trade. If it's part of your plan, if not, you don't have anything to do here. These are all in the Trader Lab. This is the target. Over 90% probability we'll take either the first hour high or low out. Notice the reaction. This is where the short was for mean reversion last time around. This is pulling, opens the hatch. There you go. This trade here could be over right here. You pull back, you get VPOC migration. Now you have a couple possibilities right here. Pull back, you're going to push off, or pull back, hit this, and then mean revert. Those are the possibilities. VPOC. So this is a continuation trade, but it's a tough one because right here you got to scale. So if you get in here or here, the better way to do this is with the volume. This is the developing volume point of control. Remember, it's still marching higher, saying these levels are too low. And we have two trades here. We have, well, there's only one in this configuration, actually. There's two possibilities. One is we come back inside and take all these longs out and come back down here. The other one is with the migration that we continue. And this becomes called the IB continuation trade. It is a long, and it would be off of here. And your stop would really need to be under here or under here, where the sellers took a shot and failed, there and there. Are we getting close? Where are we? There you go. So this trade is the IB continuation trade, structured trade. And based on what I'm seeing here, there's a lot of selling. You got to manage the trade. Now we're in real time. I'll look up at the questions if you got any, and then we'll continue. I'll get into the real-time shtick, as they say. So here's what we got to be conscious of. Let me look above. This has a statistical probability. This was the highest volume or retail price in the ETH. Don't forget, when the market accelerates in the trend configuration, they can leave these things behind, but this has a good probability. And past performance not indicative of future results. The most important thing is not that this has a high probability statistic. It's what's happening here. And then if we see the buyers, we have the potential to get here. And just because it has a high probability, it's only a possibility. It's not anything more than that. What I tend to do and what we do in Trader Lab is trade towards targets or statistics. That's why this was a target. And then the next target up is the overnight volume point of control. It may never get there. So that has nothing to do with it. So this here, if we're talking about trade management, by the way, these are very simple. It's really micro high volume structures. If this is too low and I break high, because I have my buyers here, I can test it. I break high, this is support. You can see the sellers here, so we have resistance. Right here, buyers. If I can't get it above the seller, we can counter rotate. My stop needs to be under here. If I break high, buyers are back in control. Where were the sellers stuffed? Well, buyers took over here, seller tried here, sellers tried here, buyers are active here, buyers are active here. Your stop could be trailed here. Now you have to vet this. Buyers are here, sellers took a shot here, they got absorbed. When you see delta and you don't see continuation, it is absorption. There's a seller here. The buyers absorb the seller. Sellers are here. Where's our rotation? I get my buyer here. I break high. I see active sellers here. Buyers are still consuming the sellers. So my stop can be here. I need to be alert now because I'm seeing more absorption. I'm seeing these icebergs going off. These are high. 600, 700, 700, 1,300 icebergs. A lot of selling on the way up. So I can see in Bookmap that I'm seeing a lot of selling. 800, 1,200. See what I'm saying? 700, 700. Change in behavior. And I'm also seeing them in the absorption. They are absorbing the buyers. So at some point, and we don't know if, when, or ever, what's going to happen is we're going to run out of buyers. So that what we want to be thinking about is if we run out of buyers, what's going to happen? What's going to happen is we're going to counter rotate. I don't pick the high of the day. I have never figured out that. I know where the high of the day is at the end of the day. So I don't do that. So if I'm thinking the market can go higher and I have a statistic above me that has a high probability, all I do with this is manage the trade. Me. Now, you can do something else. So when I see a selling trigger, so the way I do it is I trail behind. This is all fine. I'm going up. I see this. Where was the seller absorbed? Here. So my stop can be under here. Where were the sellers? They were absorbed here. My stop can be under here. I get my buyers. Looking good, Lewis, but I'm conscious of what's going on. I see 2,000 go off here. I see my seller. I see my buyers, but I'm seeing more aggressive selling. Now I see my sellers. So I'd get taken out of the trade here, here, or here, wherever I'm trailing my stop. And, I can't pick anything. So that's that, That's just the way the cookie crumbles. So now we're back at the IB. Let's watch this. We have a couple of possibilities here. We have what's called the IB continuation. We're under the IB. This is a key location. Remember these lines, what they're drawn from. It was from the last time we were up here and it was too high. If I come back to there and this area, I want to observe behavior. Let's see what it does. And these are not trade recommendations. All I do is I look at levels. This is the auction. Now, if I get it, now I'm under here. If I can't get back above this, and this would be an area to observe, I'm looking now at a potential trigger. So let's see what happens. I'm seeing my seller. I'm at a location. This location was created way back when, and I'm still seeing my seller. So this now is not a long. It is a hang out and be a tourist. So let's watch. So nothing here. This was a suspect right here, but I see my seller. I come under the IB. I'm testing this from above. This is important. This is important. And this is still important. So let's just watch. Are you guys with me? And guys, these are not trade recommendations. You can take a stop as well as I. I take them all day. And I don't care about it because I am managing my risk. And I know if I follow my plan that I have the possibility. So right here, we're looking at structure. We're looking at location. We're looking at right in this area. Not a trade recommendation. Too low, microstructure. We're watching this area. I'm not going to call the trade. I'm just going to let you guys watch it, if it is a trade. So this trade, if it's going to be any good, we got a lot of selling here. We need to watch this area here, right here, microstructure. This is where the buyers took over, but I see some large selling here. So let's observe the location and see what it does. And again, not a recommendation. We could easily come here, but this is the structure to observe. Let's just see it. I find in this configuration, the only way I operate in these is I cut my size down, and I also use limit orders for entries. In other words, if it doesn't come back to my location, then I have nothing to do. I get to the point where I say, I just don't care, because my job is to be here, not this one trade, you know. So that's just the way I work. So what I do, and these are not recommendations, you have to vet this for yourself, is when I put a trade on, in other words, it has to fit my maximum risk parameter. If this structure is here, and I have this, remember, this is all on the chart from way back. I think it was there. I can't remember anymore. Should put a box around them. That would make it easier. So this is our structure. This is our structure. Our sellers are here. They got absorbed. This guy was absorbed. So I have absorption, absorption. I got my seller here. They're absorbed. This is my location. This is right here where the buyers took over, and these were absorbed, and this guy was absorbed. So I have this, 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 and test. This is the long. Your stop is here. That's a fair amount of risk, you know. And then what you need to be doing is scaling. Where's our resistance? I got to try to keep up here. This is right here. You can look at this. And what I do when I'm doing this stuff is I'm looking at both sides. So I know this is too high up here. I would have a line. I know here this was support. I broke beneath it. And you can see what creates these. High volume, you see. I have high volume there, and I have high volume here, right there. So if I get long, I got to be looking to where these obstacles are, and they're high volume. So, but my job is to get risk neutral. That's the most important thing for me. I just want to get risk neutral, and either it works, it doesn't work, or whatever it does, and that's that. So here's your high volume structure. So if I take a long here, my stop is here. I have to get risk neutral. If I get taken out of the trade, I scratch. That's the end of it. I don't think anything more of it than that. So if we're under here, then now we're looking at this. And this is also called the IB failure. So once we're back under here, then this is the target. I have no short. I just hang out. There's no magic, guys. It's just trading. High volume. So if we come back around again, we got to clear this. This is also an outside edge of the distribution. It's called a low volume node. So it's like an outside edge. So what that sets up is mean reversion. You don't know until you know. So this is our outside edge. So what this is like now, if the market got too high, which maybe it did, then it sets up rotational trading. You're back into this. So this was the last place to continue and to get out here. Once you fall back inside, then the long is off, and then it sets up this. So for me, this would be my last long, and I have the short could be a short here for IB failure to here. So you can, if it's in your plan, you could be long from here to failure. When you fail, you pull back. You have volume here and here. If you have enough room, then you're looking for this. It's a rotational context. There's just no way. The other part of it is you just park. It's up to you. These are different contexts inside a context in TraderLab. I will tell you, for me, what I do is I might take the last long And when I see the IBF setup, I will not take the IBF because I can't turn around that fast. But when I recognize the trade, then I'm going to go, well, I'm not getting long now because this is the target. And even if I was long from wherever, lower, and I got wherever I got, and then I see the IBF, it's an exit for me. So this structure sets up two possibilities, either a short or an exit. So, but the long was taken out, from this one. So this is okay long for me. But now this is the target. So I have nothing. But this is real time. So that's what I do. I don't flip quickly. I'm much more intentional and patient because I don't want that emotional stimulus. I want to be in a state of calm, not in a state of urgency, which is then adrenaline. It's flowing, and my cognitive state is not at its, let's say, its optimum level for doing trading. That's me. That's just me. And you'll find what that is for you. Just saying. Are you guys tracking? Making some sense? Hi, Alexa. I use limit orders. And especially in a day like this, I don't use I do use market orders at times. Most of the time I use limits because my number one concern, at least in my plan for me personally, is risk management. There's so many trades as a day trader. And I mean so many. And as the volatility increases, there's more trades that I just want the trades that fit my risk parameter. So if a trade comes here and there's a big bump and it doesn't come back, I just say, well, that's not my trade. My setups are defined. So my trade locations, I know where they are ahead of time. I know, and I don't know what will happen. I have my triggers are defined. My entry would be here for this long. This, what I'm saying is, so I know, like this sets up a short here. If I don't have a way in, I don't have an entry here, so I don't have a short. I don't have any way into the short, but I know the short target is here, and then possibly to come down to the other side, out here somewhere, or not. I don't know. Because what you've got going on here is something that looks like this, rotation. And when you have this is called the mean, and mean reversion is outside in, outside in. It doesn't mean that we're not going to just come all the way down and fall out the bottom. Nobody knows that. So, but based on what happened at the low of the day, it is possible that is a secure low because of that, which was our target for the downside, and we hit it in ETH. Now, this is all great in hindsight, but that's what it is. These are all on the chart. How it manifests itself is part of the joy, So that is what it is. It's just trading. So now we're in balance. So balance is what's too high and what's too low, and it sets up rotational trading. So this current condition is only outside in trading, no trading from here. This becomes a target. So if there was a short from up here, it would be to here and then outside. I'm not saying you cannot trade inside out, but it has more risk to it. But what we know is we are in a mean reversion structure. So if, as an example, my trade plan, and this, you have to vet yours for yourself, I will not trade here. I will trade out here to here because it's a target, but I can also come here, and if it's too low, I can come back here. So if I do take a trade here, I know I'm in an extremely aggressive position I'm putting on, and then I'm going out here. So in the Trader Lab, you have to have rules, for your trade plan. And what I do here in the stream, I have a lot of trades, of course, that are not trades that I share in Trader Lab. because I'm going on 45 years of trading. So on that basis, these are good habits or good rules to have. That is, don't trade here in mean reversion. The thing I think for developing traders is to develop the discipline. It's most important to have discipline because that's how you're going to stay in the business. It's not trading from here to here. It's trading from wherever your quote plan dictates. When you have the trade that fits the parameters you've defined and vetted, that trade goes on in spite of the uncertainty, because every trade is uncertain. If your rules say do not trade here, you do not trade here. Your job is to trade from here to here. And the way you measure yourself as a professional trader, a career-based trader, is not the outcome of the trade. It's, did you apply your edge and accept the random outcome of your edge? You may not have an edge here, right here. So why would you initiate a trade here? Even if this time it goes down 50 points, why would you do that? Because that's not where the edge is. That 50-point move, and I'm just making it up, is an outlier. You do not stay in the business trading outliers. You stay in the business trading an edge. That's how the casinos operate. That's how this business operates. I hope that makes sense to you. And what the Trader Lab is a community of like-minded traders who've come together to leverage their collective experience to build the business of trading. The business of trading is not a video game. It is very much a planned, strategic endeavor where you're seeking alignment in a completely uncertain environment. In an uncertain environment, your emotional states are continually triggered, fight, flight, and many things that disrupt your intentionality. This is the antithesis of what we experience out in the quote outside world. This is really like gaming. It's operating like a casino does. They just play the games. Cards are random coming out of the deck, and the way gamblers play the cards is random. And the only way a casino extracts dollars from the gambler is over a random distribution of outcomes. The only thing that casino controls is how they play the game. That's us. We're the same. So it's either you can be the gambler or sit with the casino, and I think the casinos have done pretty good. So in the Trader Lab, it's really about understanding the business. This is not click, click, click. It can be, but that won't. I don't think you'll be here. That's just passing through. And retail trader statistics are abysmal. So the thing to do is understand what retail traders do, and we've all at some point in our development done that. The thing about it is when we see random outcomes, our mind tends to think that that is a winning process. You can throw a dart at the board and have a winning trade. That does not create, in my opinion, the basis of longevity in this business. The thing to know is over 50 iterations of that condition, is it profitable or a failing situation? The other part of that is, what are your inputs to create a decision? Yours. In other words, blackjack, and it's a very simple, logical situation. They only play 7 cards in blackjack. They cut the deck a certain way. They shuffle it. They do this, and it's all exactly the same. Retail traders use multiple variable inputs. So that means derivatives of a 10-card blackjack game, maybe a 12, maybe a 6, maybe a 4, and it's just spaghetti against the wall. Some spaghetti sticks against the wall, doesn't it? But that doesn't give you an edge. The casinos don't do it. I think if you want to start out in the business of trading, you need to look at what does work in this environment, which is a random environment, and then reverse engineer it. Our outside edge is out here. We have a structured trade, not a recommendation. Out here, VWAP to VPOC. Let me look a little lower. These are areas that are important. So the next area we will be observing in the Trader Lab is out here. So here to here, here to here, here to here. In other words, these are possibilities. So what I know already based on Trader Lab is I'm going to be looking at areas. This is the low volume node here. This right there is an outside edge of a distribution. So what I anticipate is that we will come outside somewhere. This is part of the joy, and very hard, by the way, to pick, well, speaking of, an outside edge. So sellers are here, buyers are here, sellers were overwhelmed here. This is micro high volume. Let's just observe the behavior right here. And if it doesn't hold it, there's nothing to do. That's basically how this would work. So we're watching this here. And this is not a trade recommendation. This is hard because mean reversion, and we call it mean, and there's no trigger here. We call it mean because where's the outside edge? That's what makes this so hard. So, and we have this, don't forget, this and below. So in this configuration, we're trying to find an outside edge. Microstructure, outside edge. I'm looking for triggers. By the way, this will be potentially resistance up here. So I'm looking for triggers now. Same process in the micro. Resistance is here. Now I don't do this while I'm trading. I'm looking at it. There's high volume here. We're just going to look at it. Here's a test. These are your tests. Now we're out in outside edge. This is hard because what separates this one from this one, you see? And where's your resistance? It's here. Right there, actually. This is micro high volume up here. So the way I look at this is, this is a micro consolidation. It was too high. We broke away. On the opposite side, this is a micro consolidation. We broke away. So support, resistance. If I take a long, I've got to be scaling in this. I need to clear this to go here, which would be the target. And this is my least favorite. There is such a thing as a favorite, trade. This is not it. Anyway, I'm out of time, guys. Please give a thumb up on YouTube. If you're interested, visit the Trader Lab. There's a link in the bottom of YouTube. You can visit the Bookmap Discord Trader Lab community. There's 60 PDFs of these structured trades you can download and reverse engineer, plus a library of streams, some up to 5 hours long of real-time narration. And you can see these trades as they develop. This would be your scale. And again, if we get above here, where's our next target? It is here. This is specifically mean reversion. Please give a thumb up in YouTube. And if you want to visit the Trader Lab, join the community. There's no cost. And you can, I think the thing about the Trader Lab is it's not trade calling. It's about building the business. If you're interested in developing potentially a career, and your mileage may vary, I think the Trader Lab can help you on your journey. Please give a thumb up in YouTube and click that link down there if you're interested in visiting Trader Lab. Thanks so much, guys. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, review, screenshot, and move your career potential forward. We're all here today so we can be here tomorrow. Follow a vetted trade plan. Do not be a gambler. Remember, each of us has a choice on which side of the table we sit on. You can either sit with the gamblers or sit with the house. It's really up to you. Thanks again, guys. Thumb up in YouTube. Look forward to seeing you tomorrow.